And we're live. How you going, Phil? Tarrant, Tom Panos, Real Estate Exposed, winding up 2022. What a year it's been, Tom. I've still got a couple of weeks left in me working. How about yourself?
Look, I'm the same. I mean, Phil, it's, and I've set it up that way, or my team has set it up that way. There's every day this week has been at least 8 appointments. Got 8 appointments today. And I'm just having a look, Phil. It does ease off. Look, pretty much, mate. It's business as usual for me till the 20, including the 21st of December. Then Thursday, the 22nd of December, I noticed Susan's been kind enough to actually put no appointments in there, or Judith. But Phil, I think it's really weird, but because there are many real estate agents who actually have started to act and behave as if it's the 25th of November is the Christmas day, not the 25th of December. And this has come to me from a lot of franchisors that are basically saying they're finding it really difficult to engage with their real estate agents. And their agents say it's been a long year. Their agents say we didn't really have a proper break. The agents are saying, our vendors have been very hard and we just need a bit of a break this year. But you're full steam ahead. You're still, I can see that you've got conferences for your, including your Christmas party, which I think is, you told me earlier on, is tonight, but you've had lots of off-site retreats and brainstorming sessions. When are you going to ease off? When are you going to ease off?
Officially, as a company, we have a 3-week shutdown period that starts tomorrow. However, we continue to do everything as per usual as an organization. So we're delivering content through that period of time. We're delivering podcasts through that period of time. And we find when a lot of organizations go to sleep in the media, we have huge traffic in December and January. But the type of stuff people consume is a bit different. Podcast listens go off the chart during that period of time, because I think people are just, they've got some time to themselves. They're chilling. They might go, you know what, I might go and cut the lawns and I'll listen to Phil Tarrant talk about something, or Phil and Tom talk about something. So we find that we get a lot of traffic during that period of time. So some team members will be working. We try and give everyone a bit of a rest time. But yes, we have our Christmas party on tonight. We're in sunny Terrigal, Tom, sunny Terrigal on the New South Wales Central Coast. So we go away as a company a couple of times a year. We normally do a winter event and a summer event. This is our summer con. But for the last sort of 3-4 days, Tom, from Monday, just different sessions with different teams in a more relaxed environment, just debriefing really from the year that's passed and preparing for the year in the future. We've spoken about this cycle a lot before on this particular live stream and podcast, Tom, this sort of, this planning, briefing, executing, debriefing cycle is something we do as an organization, both organically but also formally. And it's a really good way. We do it sort of on a daily basis, weekly basis. We do it on a per event basis or a per sort of significant event basis. And we get a lot of really good advancement out of it. Just, embracing open planning as an organization, nameless and rankless, breaking down what we're doing well, what we're doing less well, and how we move ahead in the future. And, offsites like this are a really great time to do that. The team's engaged, mate. They're all over the Central Coast at the moment. There's people horse riding, there's people surfing, there's people fishing, there's people making soap somewhere in one of the wineries up here. There's people at the water park in Gosford. It's all happening, Tom. But so I did run into, on the streets of Terrigal, the crew from Stone Real Estate Terrigal yesterday, mate. It's good to see them. They watched the show, and to the guys and girls over at Stone, it's good to see you at the pub yesterday. Sorry I didn't come back and have a beer with you. I got caught up doing a pub quiz for our editorial team. But Tom, mate, they look pretty busy. They've been telling me they're flat stick at the moment. They were having a bit of a feed, I think, after their day. But mate, they were pretty sprightly, pretty energized. I don't know if you know the guys and girls at Stone and Terrigal.
I think I do. I can't place their names, but I'm very certain, because I do a fair bit of training for Stone. But Phil, we're talking off air before, like, this is the time of year that you obviously want to spend relaxing, recreation, connecting with your family. Everyone's busy during the year. This brings you a time together. I've actually, and we didn't talk about this off air, but I'll share it with you. I've sat through 111 business plan sessions in the last 8 weeks. So that's all my one-on-ones. And I just want to show you something. I want to show you in detail what a great business plan looks like. And I only share this with you because I think over Christmas, people should be thinking about how they want their lives to pan out. So let's look at this, guys, here. Have a look at this. A guy, Tom Hector. This is a serious business plan. Look at this. Everest mission goes through team standards, wants to write $2 million in GCI, the team culture that's needed, the KPIs that need to be reached, listing lead sources, goes on, meeting operating, daily meeting agendas with staff. Each day goes on, meeting agendas, daily tasks. Each day, what is each team member going to do, right? Goes off, talks about the 12-month marketing plan, talks about the, prospecting plan, then goes off each strategy and outlines how it's done. Service area strategy, buyer-seller strategy, just listed strategy. The point is, Phil, this guy here is not going to use luck as his strategy next year. He's gone through, dug deep, looked at his business, and I don't think everyone needs a 72-page business plan. But Phil, I can't get over the amount of people that work in the real estate industry that are winging through their plan. Like I would say half of them don't even have a one-page map on how it's going to work. So I just think, Phil, it's a really good time over this holiday period to sit back and reflect on how you want your life to look like next year. And I actually find that on the beach or on the sofa with one eye on the cricket or just chilling out, your brain's actually clearer than what it is during the year. Do you find that you think better when you're away from work?
I do different type of thinking. And the thing is that if you're in the cadence of your day-to-day activity when you're dictated, no doubt your life, Tom, is very much like mine. It's dictated by the calendar. Everything is time-based. I'm not like a big list person. I'm very sort of time-bound. So during the course of the week, all of my time is allocated to doing particular tasks. What I do enjoy, and I actually did this a couple of weeks ago, I went through and cleared out my calendar for the next 3 weeks. So I don't have any, except for a handful of things like this, for example. I've got a clear pathway, so it means I'm not dictated and dominated by my calendar. I get to sort of choose my own adventure, which allows for a different organic way of thinking. So I'll definitely be using this time to be doing a lot of that work, Tom. Interestingly, with your business plan, I think a lot of people get scared by business planning, and looking at that brief plan you put together there quickly, looks like a lot of time, energy, effort, thought, and structure has gone into that. A plan is only as good as the planning that goes into it. I was chatting about this to someone the other day. This logic. I think when Eisenhower was the supreme commander of the Allied forces planning for the D-Day invasion, his thing was the plan is largely irrelevant. It's the planning that goes into it which makes it impactful, because a plan doesn't last from the moment you start sort of working through it. It's largely done, but it's the rigor. It's the rigor of planning. It's the rigor of going through the mental process, the involvement, the collaboration to creating that plan is where its real asset lies. So looking at that there, Tom, it looks like it's a real mixture between the strategic and the tactical. The strategic being, no doubt, this is where we want to go, but what they've got there is the how. So it's a practical application of their planning. So it gives them the structure and the architecture from which to set about achieving those goals, those strategic goals. So I imagine that's probably at the more sophisticated end of planning, but your business plan can be one page. You need to know, as a real estate agent franchise and office of mortgage brokerage, okay, what's the key KPIs and headline goals? What do I want to achieve? for 2023. Okay, that's great. Now, how do I go about doing it? And how you go about doing it may change over the course of the year. You need to be responsive and reactive to market environments. You need to have that situational awareness and appreciation to be able to move and realize and capitalize on opportunities when they present themselves. But largely, the plan and the objectives probably don't change a lot. And this is what a lot of people get absorbed and obsessed by business planning, think it's a very difficult thing to do. They're really organic things. Go through the motion, go through the process of the planning. And I tell you what, you'll go into 2023 with a much clearer head, a much greater sense of direction, and a much greater sense of purpose. And what that will give you is the ability to prioritize what you need to be doing at any given time to be most impactful to the goal that you're trying to achieve. Really, really simple stuff, Tom. You know, Winston Churchill said it when he did his planning for the Second World War. He said, what is the goal? The goal is to win. It's simple. The goal was to win. And what they had to do was just take the fight on to into Europe, etc. But very, very simple planning. The best plans are simple, Tom. The best plans are simple. You need to remember that. Don't get us good.
Phil, I think it's a look. Let's talk about real estate ones, mate. For me, it's 1 hour job. I mean, I could probably do it in 1 minute here now. A guy wants to earn 500,000. I'll talk it through in 60 seconds. A guy wants to earn $500,000. He's got to write $1 million because he's on 50%. He's got to write $1 million. The average commission is $20,000 per property. Beautiful. You've got to sell 50 homes. Okay. Next thing is there 50 homes available? Well, yeah, I go onto my RP data thing here, come up here. I bring this up because I do need to get some data. I go to the word markets. I put the word, let's turn around. Let's put Terrigal there. Let's assume I'm working in Terrigal. Terrigal 2260. It's told me that there was 208 houses sold in Terrigal. And there was a total of 145 units. So that takes it to 355 transactions. I need to get 50. Right? 50 over is 1/7, whatever that is as a percentage, right? 1/7.
That's your market share.
That's your market share. So we can turn around and say, this thing's doable. Then you turn around and say, well, okay, so I've got to get 50 sales. It's doable. I'm going to give it a crack. I probably need to get, to make 50 sales, I'll have a look at what I listed this year to show me what my list to sell ratio is. Oh, okay, great. I've got a list to sell ratio. If I list 100 properties, I sell 50, which it's always a lot higher than that, but just use that for mathematics' sake. So my list to sell ratio is 50%. I've got to list 100 properties. That works out to being 8 properties a month. My conversion rate from appraisals is 3-to-1. I need to get 300 appraisals. I then turn around and say, I need to get 300 appraisals. Very simple. Then you put together a 12-month prospecting plan, a 12-month marketing plan. And as you said, that can change depending on what's going on. There's some big news that changes the way we're going to do things. And then you're done. On 3 pages, you come into the office every day and you keep reminding yourself, hey, I need 300 appraisals. 300 appraisals works out to being, very quickly, calculator, 300, divide that by 12. It's 25. I need 25 appraisals. You got that on your board there. That's what we're focused on. We can't control the government. We can't control the Reserve Bank. We can't control our competitors, but we're going to control our behavior to get 25 appraisals every month. And listen, I think if you act that way, you'll drift in that direction, Phil. I'm not even saying that that's the number you'll get to. You might get more, you might get less. But the good news is you've actually put your GPS unit destination where you want to be on the 30th of December. You've entered it into your GPS on the first day and you start heading in that way, right? And you are right, Phil. There are things that happen. There could be a roadblock. There could be an accident in one street. We got to change the plan. We're going to go there, right? Or, I don't know, your car breaks down. We're going to have to ring up an Uber to pick us up from there. The point I'm saying is, look, put some thought into it. Christmas is a good time to think about it. I have a view, Phil, and every time I talk about it, I get slammed on social media because there's a lot of people that don't want the market to get better. There's a lot of people. It's generally not people in the real estate industry. It's just generally, I have a lot of people that follow me that aren't in the real estate industry, right? And every time I talk up the market, they start saying, oh, well, there you go, diluted. He's just talking it up. What do you expect? He's a salesman, blah, blah, blah. I think, Phil, Sydney, Melbourne, not only has the market bottomed, I'm actually beginning to see it's going up, Phil. Example, I got an example of a property. On Saturday, I auctioned a property in number... Oh, sorry, that's the 17th. Look at this. This Saturday's chock-a-block too. 17 Adeline Street, Bass Hill. Sold at the height of the boom for $1,160,000. 17 Adeline Street, Bass Hill. Gets sold last Saturday for $1,202,000. It actually had gone up. And we're talking about the height of the boom. We're talking about October last year. There's no 10, 15% drop there. And real estate agents are telling me that not only have prices stopped dropping, they're getting surprised with some of the results. Early days. But we know when Sydney and Melbourne sneeze, the rest of the markets catch whatever they've got as well. So let's see what happens, Phil. I mean, it's been, don't get me wrong, it's been a hard year. 15% drops in a lot of markets, 10% drops in other markets. There have been other markets that have been totally unaffected. I can't get over, Phil, I can't get over how many wealthy people are in Australia. How many people that buy property cash 10 million plus. A lot of people, Phil. And it's why prices in that sector has not gone down, it's going up. They've actually seen property as a safe haven for against inflation.
Well, property can be a safe haven for a whole bunch of different reasons. The inflationary impact, and we spoke about this last time we got together, Tom. The inflationary impact has been felt, but in many ways largely normalised. People have absorbed that inflationary impact, and I don't hear too many people now saying, oh, wow, things are getting really expensive. I think it's just assumed stuff is expensive. I still get the occasional rude shock when I just go, how much is that? That's crazy. It's bonkers. But it's been largely absorbed. We spoke about this. I think collectively, me and you, probably two more 25 basis points rises in February and March to take us to the top of the market at sort of 3.6% of the official cash rate or thereabouts. And as soon as that happens, Tom, and that mental shift, when people just go, okay, things aren't going up anymore, I could probably move ahead with a good understanding and appreciation of what my interest rate will be and therefore what my repayments will be and what my serviceability will be. I'll go out and start shopping for some real estate. There is suburbs in Sydney which have continued to grow upwards price pressure through this whole softening cycle. We're going to remember it's a catch-all of the market. Every suburb, every street operates in its own individual capacity. Just interesting on that Bass Hill property you sold, Tom. It must have been a lot of pressure on the auction to push it up over where it was.
No, it was hard work. Good block of land. You could probably do something on that block of land. I feel there was, I sold 10 out of 14 on the day, and then another 2 got sold on Sunday. That's 12 out of 14 in December, right? Which is normally not considered the best sellers month because you got, stock that's lethargic and it's sort of residual stock there. So, Phil, I am really fascinated to see this supposed mortgage cliff play out next year, right? We've heard it and we've heard it and we've heard it. Fixed rates from 2% are going to 6%. I just very curious to see how this thing plays out because Phil,
good remember also, like, I don't know the numbers, but I would assume most people the majority are on variable rates rather than fixed rates. I know most property investors usually dabble in the variable rate environment. A lot more owner occupiers are probably fixing their mortgages, but And maybe for next week we can look at these numbers, Tom, and actually come back. By the way, 71.7% market share for mortgage brokers reported in November, which is absolutely bonkers, and it gives you some sense for how brokers will play a role as these fixed rates come off. But I'm not too sure of the quantum, the amount of fixed rates, how many Australians are actually on fixed rates versus variable rates, and what that impact will be. But I think we need to go away and do some maybe we can get a guest on to talk about it as well, Tom, to get a sense for it all, but how big an impact it will play. So are you calling the bottom of the market, Tom?
Not in all areas, because I do accept that there are sub-markets. And when we were talking about the market being challenging in Sydney and Melbourne, a lot of the people in the state of Queensland were oblivious to that. They're saying we're not affected. Perth has just gone stronger and stronger every month this year. So not in every marketplace, but in the marketplaces that we know, most of the sales are densely populated, which is New South Wales and Victoria. I would say it is. I mean, I'll give you another example of how sentiment has changed, Phil. All year, I've been going to vendors before I start an auction, and I say to the vendor, and it was very good. It helped me actually get deals done. I'd say to them, what do you reckon the market's like? And they'd all say the market's not great at all. And then I'd say, what do you think's going to happen in the near future? They all would say it's going to go down. But that changed in the last 2 weeks. I'll say to them, what are you seeing in the market? They're saying, yeah, it's not the best. And what do you think is going to happen in the near future? It'll probably go down a little bit, but interest rate rises are coming to an end. We finish by June at the latest. So we actually think that and this is what's coming back from vendors. Yeah. So I love getting a sample size of not one person. When you hear it from like about 10 people, you know that sentiment is changing. And that's why I think there's been a rush of buyers. Like I talk to agents, Phil, because you know that's what I do. Mate, the agents are telling me that there's been a bit of a rush of buyers.
So who's buying? So tell me who is buying and who is selling it at the moment in this market.
Not a hell of a lot of investors at the moment. Right? They're not buying, right? But who is buying are people that wanted to buy, they held off, and they could be different kind of people. They held off when they saw this market turn, and then they thought to themselves, let's just wait and see how this market transpires. It's dropping. And all of a sudden, they've gone from a researcher to a player because they are thinking to themselves, if it's not at the bottom, it's near the bottom. And they'd rather buy near the bottom than when it takes off. That's who's buying. Principal place of residence, most of the people, but there's a hell of a heap of upgraders, I notice. And I think what they're doing is they're factoring in, hey, my place has dropped 100. The one I want to buy has dropped 250. It's probably not a bad idea to do the jump now. Yeah, and that makes sense too, because a lot of the times what happens is the one under $1 million has dropped less than the one over $1 million, and that's what an upgrader does, you know. But in terms of locations, all I can say to you, Phil, I know that you have come from the West and you've got your slogan, West is best. For me, it's been the year of the West. I just can't get over how attractive it's become as an area. I can't get over there's still a hell of a lot of great results happening in that marketplace. The West benefited out of COVID. And the reason it benefited, Phil, was that we were living in a society where just be as close as you can to the city, even if you're in a small, dingy unit, just pick position. Bang, COVID comes along. Hey, this is not good being in a confined unit with 30 other groups of people. Let's go out west. All of a sudden, they go out and they realize, hang on a second, it's taking me 25 minutes through these M1s, M5s, there are M's everywhere, right? Right? All of a sudden, this is not 40 Ks. This is only like 20 minutes now. It's not like, Phil, it's not like the old days where you'd be driving from the west, right? There was one road in and there was one road out. You're coming here. We got M's. I think I'm devastated because I'm trying to fly less, but I've just been told in a week there's a new road from Haberfield to the airport. I wasn't aware that it was opening up. It joins up from Haberfield and it goes all the way to Mascot or Gardner's Road.
Mate, the arterial network for Sydney, and it's happening in other capital cities as well, is improving. But the point being, Tom, the logic, the logic of, be within 10 minutes, 10 kilometers of the CBD because you're close to amenities, you're close to restaurants, you're close to shops, you're close to business, you're close to everything that you need. The logic still holds true. All of these areas, and let's use Sydney as an example, it's still the same logic. You need to be close to a city centre. Liverpool is a city, Blacktown is a city, Hornsby is a city, Penrith is a city, Campbelltown is a city. The logic still holds true. So you can live within 10 minutes of it, Parramatta, and you can live within 10 minutes, 15 minutes of any of these mini sort of city centres and get everything that you need, like living in a 2000 postcode or a 3000 or a 4000 postcode. So that's why these areas, these outside of those major postcodes in the state capitals are booming along. You can get into town. If your office is in town, you need to be there 3 days a week. You know what? You can jump on a new train line out through northwest Sydney or wherever else it's coming from. So it's completely transformed things. I think by memory, like a fifth of all Australia or something other lives in the western suburbs of Sydney, right? That's a big area. The mortgage belt from Campbelltown all the way up through to Hornsby and out to the mountain range. There's a lot of people live in that belt, Tom. A lot of people live in that belt.
And I'm just having a look, and we know that schooling is a big driver of buyers' decision. Phil, the results have just come through New South Wales anyway. I'm having a look at some of these schools. Parramatta High, Borkham Hills, one of the best schools. James Roos tops it off again. I mean, all these schools are out in the west.
Yeah, and if you want a like prestige private school, you got Kings there in Parramatta. So it's everything is available for everyone out that way. The amenities are there. The sporting fields are there. Why do you think Australians produce so many good sports people, mate? Because they all in the western suburbs or the equivalent in other state capitals. Kids out there with great amenities. They're active. They're doing stuff. It's all happening.
The Socceroos that did so well, they were highly made up of players from Western Sydney. I'd love to comment on this. Harim Singh, disagree. The market is at the bottom. I think Harim actually comes to a lot of my auctions. He's a big follower of real estate. One cannot expect a rising market when the borrowing power is declining. I agree with everything there. With every RBA increase, I can't dispute that. 3 months after RBA stops increasing, we would see the market bottom, my opinion. That's where I probably don't agree. And I'll tell you why. Because don't underestimate the intelligence of buyers. Buyers factor in things before they actually happen. Right? That's what buyers do. They actually factor in, I know that the rates are going to keep going up, but I'm going past that next step, right? And then we've got a question here. Hi, Tom and Phil, what do you think will happen with riverfront properties with the floods happening? Phil, what do you think?
Well, you need to look at locations like Lismore in the northern New South Wales rivers region. I think by memory this year alone, I think the town went underwater twice, and there's a huge. And then go and have a look at Lismore and look at how I can't remember the name of the river that flows through it, McLean River maybe. How it weaves its way through the town. There's a lot of discussions within the state government about relocating the town and relocating flood-affected properties. I think Australians have a very short memory. I remember the big Brisbane floods and investment properties. A lot of investors were up there. It was like, don't buy investment properties in flood-affected areas. 2-3 years on, they ratcheted back up to the same price as unaffected flood areas. Australians have a very short memory. I wouldn't be buying in flood-prone areas. Considering and also coastal locations, Tom. We're on the Central Coast right here now. I look at my window here at Terrigal Beach and you see Womberall up the beach, and then you look at some other areas of the Central Coast like the entrance north, absolutely getting hammered by coastal erosion, Tom. these glamorous waterfront properties are becoming to be less glamorous because of the risk and uncertainty around the continuity or longevity of them. And then you have all the associated costs with it, like riverfront or oceanfront around, trying to sustain the sand dunes and making sure your property is above flood levels. It's climate change. If you're a believer or not a believer, you only need to see what's happened over this last period of time with weather patterns, Tom. I'd probably be erring on the side of caution investing in anywhere which is flood affected right now. Yourself, see the world the same way?
No, I'm the same. Look, with so many properties that are available for you to purchase, I just think it's safer. You're going to get better capital growth, even if you're lucky enough for the time that you own the property that there are no floods. You need to take into account the next time that you sell the property, the buyer that you're going to be buying is going to want a discount on that. And in addition to that, Phil, we've got to accept that banks are getting very, very tight because banks have been affected. If you're like, there's a lot of banks that have, provided the funding to properties in that Northern Rivers area or in Lismore. Man, they're sitting there and they're thinking to themselves, we're stuck here now because some of these people have got negative equity. So they actually owe the bank more money. The banks themselves are stuck in this scenario as well.
Yeah.
So I think what you'll find, Phil, is that banks will be a little bit tighter as well with how much they lend. Monica, what's your view on smaller regions in New Zealand? Phil, I've got to say to you, I think New Zealand real estate agents, they're the ones that they've had it hard. They actually had rate rises that actually began a long time before they happened in Australia. And in addition to that, the Prime Minister there is not seen to be very favourable towards real estate. They have an election, I believe, this coming year. They've had big price drops. Volumes have dropped dramatically. So, Monica, what's my view on smaller regions? I can tell you, you'll be buying at a very discounted price now. I would think it's funny.
Yeah, a lot will happen. The thing with New Zealand, it's a hugely attractive location for international people looking to migrate, particularly out of America. It's New Zealand's a great place. It's a great place to live. I'm a big advocate, big fan of New Zealand. It's a great place to visit. I think the current government, not to get political and irrespective of my views on this, you've had a government in there who is aligned a particular way, which is supportive of property investors. I think, Tom, to compound to the points that you made, I think they removed the ability for negative gearing by memory for property. So property investors, and again, you've got to be careful what you wish for, because the property investors aren't getting tax benefits. We've spoken about this in Australia. We're talking about this housing affordability crisis in Australia, Tom. I think 91% of all rental properties are owned by private investors in Australia. So the government is highly invested in making sure that the third of Australians that do rent, there is properties available for them. They provide that, and they've tried to tinker with it before, but negative gearing is an incentive to make sure that we have this private rental market. When things start changing, what happens? Rents go up. So in New Zealand, if you make it harder for people to hold investment property, more expensive, they're just going to pass it on to the punter. And you saw that happen. We spoke about it at length this year, Tom, when the Queensland state government was trying to change the way in which it was going to tax out-of-state property investors. All that was going to happen is that rents would have just gone up exorbitantly for renters, which a lot of these more sort of labour-orientated governments lean more towards renters in many ways, and it just compounds and impacts us. So I think if you get a change of government in New Zealand, you'll get a very different property market. Yeah,
well said. Phil, last thing before we leave today, I was talking to Pete Matthews, who's the president of the Real Estate Institute. He's also one of the founders of Realtair. And the legislation that's gone in on stopping property managers run auction rents
in New South Wales.
Yeah. In New South Wales. And it's an interesting one because I feel for people that in the rental space at the moment. It's very competitive. But Phil, market forces are market forces. And if you're going to turn around, all that's going to happen is that landlords are going to take the rent from $600 a week to now just to take it to $700 a week. They're going to have their property manager that's going to advise them. I'm letting you know, you might get more. It might be safer for us to put a high rent there. So these rents are going to go up because of that reason, Phil.
Oh, really simple, and I agree with you on that. I've been sort of reasonably vocal in this regards around, there's two sides to the coin, right? There is literally, it's a big issue facing Australia right now in terms of rental affordability and accessibility for rent. There's some areas, Tom, where people who can afford to rent can't even get a property, and then there's people who are priced out from renting. They're living in at best their cars, at worst they've got a camp in a bush block somewhere. It's a real big issue, and I know the government is looking at it. They're not moving fast enough around it, Tom. But my view, back to my point, Australian property investors, those that provide rental accommodation, they're supporting the rental market. They're supporting Australians to have rental accommodation. So my view, and you see it coming out. We spoke about it during COVID when they were trying to, they put these moratoriums on increasing rents, and people could say, I can't afford to live here, but you need to still give me my free rent. It's the market forces that should dominate and dictate the price for rents in Australia. It can't act and operate in isolation around sort of societal issues. And if that is the case, the government needs to be responsible providing affordable accommodation for those people. So you should be setting your rents at market value. And that's my point. You shouldn't gouge. You shouldn't overprice. It should be what the market dictates and determines is what you buy. Same applies for a litre of milk, Tom. The same applies for a loaf of bread. The same applies for what you're paying at the petrol pump. The market dictates what you pay for these things, and it moves up and it moves down depending on what's happening. So you set your rents at market value. Now, this whole idea of rental auctions where someone says, I'll give you 600, next person 610, next person 620, go up and up and up to 700, the inverse is going to apply. They're going to set the rent at 800, for example, see if they get a bite, because someone might do that. And if not, it's okay to bring the rent down. Okay, Phil, we're not getting someone at 800. I suggest we remarket at 770. We're still not getting someone. Well, let's remarket at 760. Hey, someone really likes it. They said they pay 740. Okay, no worries. That'll do. Put them on a 6 months, see what happens, right? The inverse is going to apply. So I don't know how positive a policy change it is, but all that's going to happen, the whole tide's going to lift up as a result of it. I know a lot of property investors will be doing what you're thinking, Tom, just going, okay, well, there's a new benchmark going to be set at the ceiling of where the rents are. Everything's going to be pushed up to it. So most renters, therefore, won't benefit from this. My view, maybe a bit contrarian. I haven't really put too much thought into it, to be fair, but it's just going to lift rents up.
Yeah, well, I think, you've got to accept that markets are free, they operate, and market value is achieved. I mean, what's the difference between that and the selling market? It's, you know what I mean? It's market forces. There's a person that's prepared to pay this price, whether to buy it or to rent it, says that's the value there, right?
That's what you do for a living, Tom. You're an auctioneer.
Yeah.
You do it on the sales side.
All righty. Now, listen, Phil, we're going to catch up again next week. And I am going to try and dig deeper and find that information about what percentage of properties are actually coming off. Well, really just what percentage of properties are fixed versus variable is probably the useful stat to go off and get. Enjoy your Christmas party. Please make sure that everyone behaves. You've seen during the week some high-profile media people got into trouble with their behaviour at Christmas parties. We know Christmas parties can make you can destroy a 10-year career in 10 seconds at a Christmas party.
People for those people out there who are hosting Christmas parties, people need to reinforce with your team about the expectations around behaviour. The government and your personal duty of care to look after your team members, but also for people to be responsible for their own personal behaviour. My tip, Tom, and I do a lot of this stuff for a living, get there early, be highly visible early, make sure you say good day to everyone, and then, I'll be sneaking out the back door is typically what I do long before the party's over.
As they say, if you don't want to slip, don't hang around a slippery spot.
Yeah, it's
Alrighty,
good fun,
Phil.
Tom. All right, look forward to next week.
See you next week, Phil. See you to all our viewers.